Hi, and welcome to this video series for entrepreneurs on getting your circular project funded. In our last video, we talked about lessons learned from the technical due diligence process. Those insights can be a game changer for your current or future projects. In the next few videos, we'll go over the financial due diligence process, including topics like modeling, risk management, and fundraising. In this video, we're diving into the basics. We'll break down 6 key financial concepts that will help you understand and present your venture's financial health and fundraising needs. First off, an income statement, or profit and loss statement. This shows how your business is performing financially over a specific period, like a month or a quarter. It should cover 3 key parts. 1, revenue. That's the money you make from sales or services. 2, expenses. The costs to keep your business running, such as salaries, rent, utilities. And 3, net profit or loss. What's left after you subtract expense from revenue. Why is this interesting? Well, it gives you and potential investors a clear picture of how profitable your business is and whether it is financially viable. Secondly, a cash flow statement, which tracks the actual movement of cash in and out of your business. It's split into 3 sections. 1, operating activities. That's the cash from your core business operations. 2, investing activities. That is cash spent on or earned from investments, such as purchasing equipment or selling assets. And 3, financing activities, cash raised through loans or investors and repayments of debts. Why does this matter? This statement shows whether your venture generates enough cash to sustain itself, pay expenses, and invest in growth. Third, revenue projections, the estimates of your future income based on market research, historical data, and business plans. Why do we need these projections? Well, first of all, they help set realistic goals and expectations. Secondly, they guide your budgeting and investments. They also show how much funding you need. And lastly, they prove to investors that you have a solid plan to make money. Next up, cash runway position. This shows how long your business can operate before running out of cash, based on current expenses and cash reserves. Here's the formula. Cash runway is the current cash balance divided by the monthly burn rate, or your expenses. So what does a cash runway tell us? Well, it shows how financially sustainable your business is, for one thing. It also helps you figure out when you'll need more funding and reassures investors that you're on top of your financial game. The 5th financial concept we need to cover is fundraising. Your fundraising ask is the amount of money you seek from investors. It's based on what you need to hit your next milestones, like launching a product or entering a new market. It's also based on your cash runway position and burn rate. It's also best to have a contingency fund for unforeseen challenges. Why? Well, a clear and justifiable fundraising shows investors that you've planned thoroughly and understand your financial requirements. Now, I can imagine you're thinking you need to be a financial expert to do your own financial due diligence, but no, not at all. You don't need to be a financial wizard. You do need to understand the basics. So, here's some advice on how you can make it easier. 1, use templates for financial statements and projections. 2, get advice from mentors or financial advisors. And 3, learn key metrics and benchmarks relevant to your industry. Understanding your finances helps you make smart decisions, communicate confidently with investors, and build a sustainable business. Before you know it, you'll be ready to manage your finances like a pro. Be sure to hit follow or subscribe and check out the guidebook in the description. In our next video, we'll dig deeper into creating a compelling financial plan for your circular economy project. See you there!